Okay, let's go ahead and get started. Welcome. I'm Mary Ellen McGonagle, and I'm the founder of MEM Investment Research. I'm thrilled that you could join me today, and I look forward to helping you bring your trading to the next level. Today, we are going to be reviewing how to spot and trade trending stocks, and we're going to provide you with a guide that you can use in your trading so that you can pull the trigger when you see these trending stocks hit your screens. So what I'd like to do is go ahead and get started and give you a little bit of background for those of you who are not familiar with who I am. Again, Mary Ellen McGonagle, and I have been working with investors for over 25 years. I started my career in the institutional realm as an assistant on the trading floor of Goldman Sachs. I was in their fixed income department, and I did from there go on to the asset management side, again in fixed income. This was all in New York City. I was actually the portfolio manager of over $8 billion in fixed income assets. This, of course, happened over time as I was promoted up through the ranks and eventually became the head of that trading desk. And it was really a truly exciting time, as you can imagine. This was when the internet was not quite as actively used. There was a lot of on the trading floor loud noise, trading, lots of phone calls being passed back and forth, and also within that realm quite a bit of information was being shared. And as an institutional level manager, it was also a time when I was given not illegal but certainly information prior to it trickling down to the individual investor. Now, of course, the SEC stepped in. Things have changed, which I think is fantastic because it has leveled the playing field from the point of view that the self-directed or individual investor can have access to the very same information as these high-level investors. So now, again, if you are investing your own assets, you have access to wonderful amounts of information. You can access earnings, telephone calls, speak to management, and so forth. So again, really quite an exciting time for you to be involved in the markets. And not only that, currently the broader US markets are also equally exciting. So that was for about 8 years that I managed money in New York. I did move with my then new husband out to the West Coast into California, and I there started my career with William O'Neill and Company in their institutional marketing department. And it was there that I learned the O'Neill investment strategy as far as high growth, and in fact imparted that knowledge to institutional asset managers. And that was another really super exciting time. I worked with managers throughout the world, advising them on the markets, on their individual portfolio holdings, on stocks, advising them. And so throughout that time period, looking and viewing at a number of charts each week, thousands, and I still do that. It is a wonderful practice, a great way to stay on top of the markets, to pick up on these trends. And so again, just imparting to you that this information that is being shared with you today has been garnered through many, many years. I've worked, in fact, through the 99, the 2000 crash, after the 99 bubble, and then the 08 and 09 period with that crash and recovery. And throughout that time, constantly studying the markets, looking at prior cycles, and learning how the markets work. So currently, more recently, I've started my own research firm, MEM Investment Research. As part of that, I do still work with institutional investors, but I've branched out and am now working with individual investors in the sense that I produce a weekly research report that provides an oversight on the broader markets and where our team thinks the markets are headed. And then actually a very focused buy list is provided. New names are added weekly as are fit. And that report is, again, available to individual investors as well. So it's a very timely report and very well performing as well. So let's go ahead and get started. Before we begin, here's a disclaimer, and essentially no need to read the entire thing. What is needed to be known is the presentation is for educational purposes only. There are not going to be any specific recommendations to buy or sell any securities today. So I'd like to go ahead and take a minute and review what we're going to be covering today. And I mentioned we're going to be talking about trending stocks. We'll begin with a definition of precisely what is a trending stock, and then how you can catch that trend early. Of course, that's what you want to do, whether it's an uptrend or a downtrend. So we'll review that. And then the third item is how you can pinpoint when that trend is over. So we'll be discovering how to get in early, and then of course you don't want to overstay your welcome. You want to know when that trend has ended. And then the fourth item is using history to give you confidence. By that I mean we will be reviewing a number of examples, and these examples are, their purpose is to visually show you what we will be discussing. And then lastly, at the end, there will be a special offer, actually 2 special offers, so I urge you to stick around to the end. And then also, if anyone has any questions, I ask you to please save those until the end. We'll have ample time to answer any questions that you might have. So let's go ahead and we will start at the beginning, and I mentioned that we'll get into what is a trending stock, and then from there we'll review the various ways that you can take advantage of this trend. So basically, technical analysis, which many of you may be very familiar with, is it's built around the premise that all stocks trend, and a lot of the analysis that technicians do is centered around defining that trend and then trading it accordingly. So again, this trend can be upward. There are sideways trends or downward. So being able to identify the trend and act on it is going to be one of the most key components of your trading. So to define a trending stock, it's to say that the stock is exhibiting signs of heading in a certain direction. So rather than, as investor, rather than you getting whipped around, you want to make sure, of course, that your stock has entered a solid trend and that the odds are in its favor that this trend will be maintained. So a lot of the work that I do is centered around uncovering these trends in not only individual stocks, trends, sectors, of course, have trends, and then, of course, the broader markets. So it does take work. It takes time, but I will say it's time very well spent. So for me, in addition to setting up screens, I'm looking at many, many charts throughout the week that will, again, visually as well as technologically screening. So let's go ahead, we'll review some of the tools that I have found to be really critical in determining these trends. So as I said, this information has been culled from many, many years of studying the markets and helping professional money managers over that time. So over, again, all of this time, I did find several key indicators that can help in defining a trend. So when you're using these indicators, you do want to have more than one signaling, whether it's positive or negative. So we're going to be reviewing 3 tools today. There are many more out there, but these are 3 that I've found to be quite useful. They're also easily accessible on most trading platforms. So the tools that we'll be covering today are the Relative Strength Index, or the RSI. moving average convergence, divergence, that's MACD, and then simple moving averages. So those are the three we'll be doing. There is one key characteristic that works in conjunction with those three metrics I just spoke to about. And that key characteristic is volume. So you want these indicators to be working when a trend begins. More often than not, it will be on volume. And I point that out for two reasons. One, if you are looking to screen for stocks that could possibly be entering or exiting a trend, a simple up or down on volume screen could be one way to funnel you into these trending stocks. But also, when you are using these, again, technical indicators we'll be reviewing, when the signals occur on volume, that is going to make it quite a bit more powerful. So here I talked about, we'll be reviewing a number of examples. So this first example is a daily chart. We're looking at net T's, and each bar of activity on this chart is 1 day of price action. So again, I talked about the three indicators I've found quite useful. We'll start with the RSI, and in this display, the RSI is being shown above the price history. And I'm not going to get terribly into these indicators. I do have other online video courses that explain quite a bit more in detail what you are looking at. This is more of a broad overview, but in essence, this RSI line is plotting for you not only current, but it's pointing toward future relative strength or weakness in a particular stock. And there are a couple of things you want to pay attention to. One is this dashed line in the center, and that's also known as your net neutral line. So you want to pay attention. This is darkened lined is the actual RSI line. So what you're looking for are crossovers above or below this net neutral. So that's the very, very basic premise of the RSI. It is a visual metric, but also you can, again, in some of my other courses, I dig more into how you can screen for it using numbers, and so that you can capture this type of move up or down. So what I wanted to get into also is moving averages. And I mentioned to you that in today's work and for my work, I tend to use what's called a simple moving average. There are exponential moving averages that move a little bit faster, but I've found the simple moving average is quite effective. And these moving averages can be for many different time periods, and they are basically smoothing out the price action of the stock. So what we are looking at here on a daily chart is, I've found the 10-day and the 50-day to be really the most effective. So this green line, it more closely hugs the actual price action, is your 10-day moving average, and then the red is your 50-day moving average. So a couple of items that can be pointed out here is when your shorter term moving average crosses up through a longer term moving average, that's termed a golden cross. It's a positive action, and you can see how the stock has had for about 6 weeks an uptrend. And as this key moving average moves up, you want to make sure that the stock continues to find support. Once it breaks that key support, that's when you want to potentially exit the trade, or we'll look further at how to know whether it is time to exit or whether it's just a near-term sell-off. So again, this is your golden cross on the upside. Now likewise, when the shorter term moving average crosses down through the longer term, that is your death cross. So that of course is a more negative. And then let's take a look at the, I talked about, it's called MACD. It's your moving average convergence divergence. And this indicator uses as part of the calculation, it's an exponential moving average, so it's faster. And so this is going to help you with momentum. You're looking for this black MACD line to cross up through the red signal line or down, and that is going to give you an indication of whether the momentum has picked up. And MACD also has a net neutral line. So not only do you want a positive signal, you want it to go up above this net zero. So let's go ahead and review. I talked about you're going to want to see at least 2, ideally 3 of these indicators flashing at the same time, and that is going to give you the confidence to, again, pull the trigger. So here we are with the MACD. You get a positive signal, but now it enters above that zero. You have the golden cross. The stock moves up through these key moving averages, and lastly, your RSI is above that net zero. So in this particular instance, we have 3 signals that are flashing in positive fashion. You're also getting the volume that I talked about as this crossover occurs. So in essence, 4 signals that are telling you that net T's can be bought. So let's go ahead, and I wanted to review very quickly 4 different ways that you can use these trending indicators. Quite simply, defining a trend up or down. Also, you can, of course, identify buy and sell signals as we just viewed. And then you want to make sure that your trend is holding. So as we get into some more examples, you'll see how you can spot that your trend has stopped. And then determining broader market trends. This is going to be critical because you do want to have the markets in an uptrend if you're buying stocks. So here we have another example, and this is Ellie Mae. We're looking here at a daily chart. And what I wanted to point out to you is a couple of things. This, of course, was the beginning of 2016, a very, very difficult period for the broader markets. But let's take a look at how we could have spotted that this stock had reversed that really quite severe downtrend. Now, one item is, of course, your RSI has turned positive. And then also you have a stock that gapped up through both your moving averages. And then it did occur on volume. And then lastly, we have our MACD above that net zero, the MACD line crossing above the red signal line. So we have, again, 4 indicators that are telling us that this severe downtrend has been reversed. The stock does indeed go on to greater heights. Now, in this case, one way that you can, this is one example of how you can spot an uptrend reversing, and that is the stock breaks below key support on volume and your MACD turns negative. So in this case, this break of this uptrend, you're getting these 4 signals because of the volume that the uptrend has reversed. So what I wanted to do here is then go into, this is the very same chart, but this is Ellie Mae with a weekly chart. And the reason I'm pointing this out to you is particularly institutional investors, they are going to be looking at a weekly chart because they want to stay with the stock longer. And let me give you an example. So this weekly chart is giving you quite a bit more history. This last chart that we were just looking at was started here. But what I wanted to point out is during the beginning of 2015, this stock had a very clear-cut uptrend. This is a channel continuation pattern, which I review in some of my other courses, but basically an uptrend very clearly in place. How can you see when that uptrend is reversed? Well, the stock breaks below this channel, but for our work, it breaks below this key moving average. Your RSI is trending negatively. Your MACD has a negative crossover as well, all at very much the same time. So this is how you can tell that the uptrend has reversed. And then this is taking us to what the previous chart, when we identified on the daily that uptrend had been resumed. What I'm pointing out here is that uptrend resumption can also be spotted on a weekly chart. Same dynamics, breaking up through key support, RSI turns positive, MACD. The reason investors would also want to use the weekly is because in that prior chart, we identified this as a breakdown. And indeed, for a lot of people, you may not want to sit through that, but using a weekly chart, you could stay in this trade because the RSI did not clearly break below. The MACD had a negative signal, but it didn't go below zero, and your longer term moving average is still in an uptrend. So this would be a way for those of you that would rather not trade in and out of stocks, or you'd prefer to be a longer term investor. A weekly chart will provide you with more information. Also, it's a little bit slower, and it can keep you in these stocks. So let's go ahead and take a look. This is pre-election period and post, and you can see quite clearly when and how you can spot this uptrend reversing. So again, breaking down through these key moving averages, your RSI turns negative and your MACD has also turned negative. So again, pointing out your uptrend and when you can spot the uptrend has reversed. So here's another chart. We're looking at a daily chart of AT&T, and very, very similar as far as getting the positive signals. Price moves up through your key moving averages, RSI turns positive, and this is another example of using your longer term moving average to keep you in a trade. But for those of you that don't have that appetite, you may use these breakdowns as an opportunity to exit, keep your eye on the stock, and then re-enter as it enters into yet another uptrend with this positive crossover here. So here again is AT&T, and this is taking you a little bit further. So the last view we were in this area, but very, very clearly, unlike other periods where they were brief undercuts, this is a very clear-cut breakdown of the stock. So the RSI very much goes into negative territory. We have a breakdown through key moving averages, and then your MACD line is clearly in a downtrend. So hopefully you're able to visually see when you can spot that your stock's uptrend has reversed and the stock is very much down in a downtrend. I talked to you about the golden cross. This is that death cross, your shorter term moving average breaking down below the longer term, that it is yet another nail in the coffin, so to speak. So here again, this is another stock. We're looking at it daily, and the heading says how to follow your uptrend longer. And by that I mean if, for instance, this particular stock has a clear-cut, this is your golden cross, your RSI is positive, your MACD is in positive territory, so we have a lot of signals flashing that an uptrend is in place. Your key moving averages are trending upward. But here we have a period, this is the daily chart, so this is about a week and a half of activity where the stock breaks down. Now, again, your longer term uptrend is still in place. So using this as your floor, if it were to break this, then it would be an entirely different story. But your MACD is still above zero, and your RSI just barely dips below zero. So you could indeed have stayed in this stock having paid attention to the longer term metric. And then here we are, I talked about, again, staying with the stock longer. We had that little dip here, but by that, I mean paying attention to what's going on in the broader markets. So this is A.O. Smith, and this big drop here was a broader market occurrence, and this happened at the end of last summer. That first day of traders made it back to their desk, and there was a tremendous sell-off. And then what I'm pointing out here is we not only have a 10-day, a 50-day, but we also have a 200-day moving average, which is both of these still appear to be in uptrends. So this one-day break did in fact was not long lasting, and the stock went on to resume its uptrend. So when you're using these metrics, and in this case the moving average, but the others as well, you do want to pay attention to what's occurring in the broader markets. So if your stock is breaking down and the broader markets are selling off, I would give a little more leeway to your interpretation of the various indicators, because it's just you want to make sure that the broader markets are still in an uptrend, and then this we had a couple of phenoms going on last year with Brexit and the election. So again, giving a little more leeway to your indicators can help you not to get whipped around quite as much. And then I talked about using these indicators to spot not only individual stock trends, but in this case we're looking at sector trends, and this is a daily chart of the technology select sector spider fund. And so what we are viewing here is this is the beginning of 2016, a very tough period for the broader markets. Tech was a little bit later in recovering, and so in keeping an eye on this as well as the many other sectors, you could have spotted the uptrend that occurred at the beginning of March. And what you're seeing here, of course, is this golden cross, your shorter term moving average coming up through the longer term. Your RSI has moved to positive territory, and likewise with your MACD is above zero. Now I'm indicating here early, and what I mean by that is you did get a positive signal crossover, and you did also get your RSI turning positive prior to this, but I will say from my work, I prefer to see the stock break up above these downward trending heavy moving averages, and that's going to provide even more confirmation that the uptrend is in place. Oftentimes you will see these early moves and they fail. We've seen that quite a bit with energy more recently, where it looks super close to reversing, fails, financials as well. So let's go ahead, and now we're looking at more recent view of the technology sector. So this is that period back in the beginning of 2016, and then technology indeed did go on to falter. Again, your RSI turned negative, as did you have a negative crossover on your MACD. But what I really wanted to point out, and this was very, very significant, is following that Brexit drop in the broader markets, the sector dropped, but when it reversed and began this uptrend in July. So the stock price again moves up through these key moving averages, and your RSI turns positive. It appears that it was attempting to do so here, but then of course that broader market Brexit vote drop occurred. So this second attempt does in fact take hold, and you can see that this is the beginning of a very lengthy move within this technology sector. So this kind of bigger picture, broader view would then ideally turn your attention to technology stocks. And then, of course, there are many sub-sector ETFs that can even fine-tune your research further so that you can see which areas within technology are really participating within this uptrend and that are outperforming the broader markets. So here is, I talked about reversals. So in addition to looking at uptrend reversals, here is an example of a stock. This is OLED, it's OLED, it's universal display. We're looking at a daily price chart. So here we have a stock that is in a very clear-cut downtrend. So we have each of these indicators flashing, telling us that a downtrend has occurred. So this is a reversal of that downtrend. So the stock price moves up above both that 10-day and that 50-day moving average. It does so on volume, and it does so in conjunction with a positive MACD signal and a positive RSI signal. So here is, if you are either visually or screening, this is what you would look for a downtrend reversal, and you can see how powerful they in fact can be. So let's take this a little bit further. This is the downtrend reversal that we were just viewing in the prior slide, and the stock had a significant move, but it really did not make a lot of progress for a fairly lengthy period of time. But then it had generally a bit of an uptrend. Your 50-day was in an uptrend, but this again is a reversal to the downside. Your RSI turns negative. This price breaks below key moving average, and take a look at that volume and your negative MACD, and then this indeed did go on. It was a very, very ugly downtrend. But again, if you have systems in place, you can get out of the trade in ample time, or set it up as a short to take advantage of the upcoming downtrend. I talked about this a lot, but it yet is another example of longer term, and this is a weekly chart. We're looking at Stryker. And what I did want to point out is this is a stock that has been on a multi-year general uptrend, and again, using this longer term moving average as your guide. So this period, of course, the beginning of 2016 was difficult, but the stock did in fact falter prior to that. So it did break this uptrend during this period. But what I wanted to point out is, again, looking at the beginning of last year, what you would be on the lookout for the resumption of this stock's prior uptrend. So without being too repetitive, I think you can see the shorter term moving average up through the longer. RSI turns positive and your MACD turns positive. So sure enough, the stock does resume its prior uptrend. I'm pointing out here that the MACD remains above zero, primarily because for those of you that would want indicators that would keep you in a stock despite this downtrend. I know most investors would not want to sit through this type of a sell-off, but if you were of a longer term mind, you are still generally okay as long as the MACD remains above zero, the stock price closes above this longer term moving average, and you're waffling around this net zero, but it's not as clear cut a downtrend as this. So I did want to point that out. So let's go ahead. We can talk about some of the items and ways that you can screen for these trends that we've just reviewed. So RSI, I mentioned that there is that net zero. You do want to, if it goes above that 40, it's a positive, and below 60, if your screening is a negative. MACD, that black darker line is the MACD, the red is the signal. So you want that MACD line crossing either up or below. And then moving averages, and the golden cross, of course, is shorter term moving average crossing up through longer term, and then the death cross is the downtrend, shorter term crossing below the longer term simple moving average. And then also, I think I made it clear that weekly metrics will work better for longer term, but it's also important to note that every single item that we reviewed can be used for intraday charting as well. So you can very much use every one of those metrics. They'll be equally powerful. They will be shorter term as far as effectiveness, of course, but all very, very useful. So here we can review some of the conclusions that can be made based on what we've just seen. Essentially, technical analysis is built around identifying trends. So learning these indicators is going to be very, very important. And then also, you want to look at how your stock has behaved historically when you're identifying trends. I often say this, that each stock does tend to have its own personality. So how does it behave around these moving averages? How does it behave relative to its peers? And then lastly, know yourself. So if you're devoted, you can do the screening yourself. We've gone over a number of examples, but if you don't have a lot of time, you can subscribe to a newsletter from a seasoned pro. I know that with my work each week, I am providing marked up charts as far as where stocks are, why they are in an uptrend, and then identifying buy points using these marked up charts. And that could also be a great way to educate yourself so that you can begin to do this same kind of screening on your own. And I did mention at the end that I'd have a special offer, and actually there is, the primary one is, it's actually an online video course, and it's going to teach you, we reviewed only a sampling of some of the characteristics. There are actually 6 characteristics of a winning stock, and by winning stock, I mean stocks that have gone on to be up at least 100%, in some cases 1,000% over a 6 to 18 month period. And so this video course is going to really define for you these 5 key traits. Again, none of it will be what we reviewed today. There are other traits that are very, very critical and important for you to identify and uncover before getting in front of these really big winning stocks. And so you will get insights on where you can uncover the necessary characteristics. And normally this is $297, but today if you click that link, you can get this video course for $39. And then also included will be an offer for you to trial my weekly MEM Edge research report. And normally it is $97 per month, but you can try it out for 4 weeks for only $7. And also I'd urge you to go to my website and you can get more information about who I am. And I think we've reviewed everything. I would be more than happy to review any questions that anyone might have. And I see we do have some questions, so I'll go ahead and dig into those. The first one is, what determines whether you use a daily, weekly, or monthly? And Ashley, that's a great question. I tend to use a daily and a weekly in conjunction. You can never have enough information. So you want to confirm what you're seeing on a weekly by looking at a daily. Daily charts will tell you if the stock is too extended or and so forth. And then you mentioned when you should use a monthly chart. And a monthly chart is ideal for, again, these professional asset managers because it really, really helpful in identifying big trends. Your mega cap stocks, you can use these monthly charts, and again, the same indicators that I talked about, and it is, those longer term charts are ideal for helping you spot these big overarching longer term trends, and they'll help keep you in a stock. And then there was another question, the indicator settings, recommended settings for the RSI and MACD. Yes, Ashley, they were the predetermined settings, and they are standard, and they are what you will find on pretty much every charting platform. And then Brian had a question about personality as dictated by the larger institutions moving them. I'm not quite sure what that means, but I will say a lot of my work centers around understanding what institutions and how they operate as far as the markets, because they are managing so much money. They are the movers of the market. So I have always felt it's important that an individual investor focus on and work with what these same institutions are working with, because again, these are the guys that are moving the markets, so you're going to want to have the same focus as they. Someone does this trend spotting also work on the Dow, S&P, and NASDAQ? Yes, Steve, it does, and I did not put that in, but just as an example, when you're using the same metrics for these individual indices, you are well advised to again look at a weekly, because you will get bounced around a lot. With the broader markets, of course, there's a lot of trading and a lot of activity going on, but my weekly report focuses on both a daily and a weekly. But yes, you can use these indicators. I tend to just use moving averages. And then how long is that video lesson? The video lesson is 42 minutes long, I believe, and a really ton of information packed into that video course. And then I apologize. Okay. Do your highlighted stocks generally represent position trades or something else? And I apologize, I'm not familiar with that terminology, but my highlighted stocks here were strictly for instructional or educational purposes. And I apologize, I'm not familiar with position trades. And then when to do you use 5 or 10 minute charts? Okay, yeah, that's going to be purely up to you as an investor. I tend to use a 15-minute chart, and that's going to be certainly for your more actively traded stocks. I've found 15 to be more useful, but many of you may find 5 and 10-minute charts equally powerful. But I will say the shorter term you go, of course, the more you will be I don't want to say whipped around, but you'll be certainly a more active trader the shorter term you go. And then, yes, the presentation is available. And then, let's see, use these for options. Yes, well, I'll tell you, I am not an active options trader. I do know that a number of subscribers to my newsletter are very active in options, because I'm pinpointing high growth, faster moving stocks, and I'm identifying them as they're getting into uptrends. So you can certainly use these metrics to get you in front of stocks, again, because you want to get that trend early. So of course, yes, options can be used. And oh, how long I'd expect a trade to last. It's really going to depend on the broader markets. So if the broader markets are in a clear-cut uptrend, as we've been since November, the average holding period of my stock over the last, I'd say, 6 months has been about 36 days. So it's really, again, going to depend on the markets. If the markets are falling apart, there's no reason to stay with the trade. And then if I put a stock on and it fails, I'm going to exit it as well. And Forex, I apologize. I am not, again, actively trading in currencies. Pro Trader Strategies does have some video courses for that you can certainly access from them. And yeah, so this was another question relating to Forex. And, you know, all of these, what we viewed today, can be used for certainly any commodities. Gold, of course, has been waffling around. You can spot trends in gold, silver, copper, and really any of these commodities, these same metrics will work. Pardon me. And I believe there are no more questions. And oh, there is one more. Does it provide trade entries and exit? Yes, absolutely. Does the MEM report provide trade entries and exits? Yes, absolutely. What we do is we identify stocks, identify their buy points, keep them on the list, and if they are in a buy zone, we continue to be in a buy zone. We highlight them. If they're extended, we alert you to that. And then when the stock fails or the uptrend is reversed, we then recommend that you exit the stock. So yes, that's very much a part of that weekly report. So I don't see any further questions. I'll stay on for a little bit longer, but I thank every one of you that that took the time today, because always, of course, educating yourself is only going to better your ability to trade, you know, most importantly, without emotion. How to find a good broker. Eek. I don't quite understand. There was a little bit of a misspelling, so I'm not quite sure. Oh my gosh, Luke, your question's great. Do I use fundamentals? Oh my gosh, absolutely. And that's actually, I am just completing a 5-part online video course that will teach you absolutely every aspect of getting in front of big winning high growth stocks, and fundamentals are critical. Absolutely, yes. And I get really specific as far as which fundamentals. And oh my gosh, activate the special offer links. I apologize. There should be someone that will do that. Let me just see if I can get that going for you. And if not, you can, I can be reached via my website, and I'll be more than happy to send anyone any links they would like. I apologize for that extra step. And the presentation will be sent out, so you can access it that way via your email. And I'm trying to get back to that other question, a good broker. Yes, so I'm not quite sure if you mean an online broker or actually an active broker. I certainly work with institutional clients. I'd be happy to recommend to you. And again, you can reach me from at my website. I'm always willing to answer any questions. Great. Thank you guys as well, and also have a great weekend.